If you were born before 1961, the moment you turned 65, the law quietly pulled you out of a whole category of bills and taxes that you are, statistically speaking, still paying in full. And nobody whose job it is to collect that money will ever call to tell you to stop. I want to say this plainly right up front, because it's the single most expensive misunderstanding I run into year after year. Turning 65 doesn't just make you eligible for Medicare. It quietly reclassifies you in the eyes of the federal government, your state, your county, and a handful of other agencies, all of which are legally required to treat you differently from this point on. There are bills younger people still owe that you no longer do. There are taxes that shrink, freeze in place, or vanish entirely the moment you cross that line. But here's the catch. That costs people real money year after year. Being legally entitled to an exemption and actually not paying are two completely different things. So, the law doesn't refund you automatically. Nobody at the county mails you a check. The agency that's been collecting from you for 40 years isn't going to send a birthday card that says, "Congratulations, you can stop now." You have to know the exemption exists, and you have to file for it yourself. That single gap between qualifying and claiming is the reason most people who are fully entitled to these benefits never see a dime of them. And before you decide this video isn't for you, let me clear up the biggest myth of all, because this is exactly how people talk themselves out of money that already has their name on it. Some people assume a list like this is only for lower income retirees who are struggling to get by. So if you own a paid-off home and live comfortably, you tune out assuming none of it applies to you. Other people assume the opposite, that this is only for the wealthy, the ones with big estates and fancy accountants. If they're living mostly on a social security check, they tune out too. Both groups are wrong, and both are leaving money on the table. Some items on this list help the lower income retiree the most. Others are worth far more to the person sitting on a house that's doubled in value over the last few years. For every single one, I'll tell you exactly who benefits most. So nobody watching can honestly say, well, that one's not for me. And if you're renting right now, don't click away either, because one item on this list quietly controls how fast your rent is allowed to climb. So let me tell you quickly who I am and why I'm the one telling you this. My name is Weston. I'm a state bar licensed estate attorney, and for more than 15 years, I've sat across the table from county assessors, probate clerks, and government agencies on behalf of ordinary families. And I'll tell you the most painful pattern I've seen in all that time. It isn't the people trying to cheat or game the system. Those cases are rare. The painful one is the honest person in their 60s, 70s, and 80s who has done everything right their whole life, and who is still paying bills they were legally exempt from years ago, simply because nobody ever sat them down and told them which form to file. That's the most expensive kind of mistake there is, because it's completely invisible. There's no late notice, no penalty, no alarm going off anywhere. There's just money quietly leaving your account every month, every year, that never had to leave at all. So, let's fix that right now. Today, I'm walking you through 5 of these, one at a time, in plain English, with the exact thing you need to ask for on each one. Then, I'll give you a few bonus moves at the end for the homeowner with some real assets, because those last ones can be worth a small fortune and almost nobody talks about them. Stay with me to the end, because the 5th item on this list is the highest value one of all. And it also happens to be one of the easiest to claim. If you only act on one thing from this whole video, it's probably going to be that one. 1, the brand new bonus deduction for anyone 65 and older. Let's start with the newest one, because it's so new that almost nobody has caught up to it yet. And that's exactly why it's being missed. Starting with the 2025 tax year, under the tax legislation signed into law in July 2025, every American aged 65 or older qualifies for a new bonus deduction of $6,000. It's in effect for tax years 2025 through 2028. I want to be precise here, because this is where people get it wrong. This is not a replacement for your standard deduction. It stacks on top of it. It's an extra $6,000 knocked straight off your taxable income just for being 65. And if you are married and both you and your spouse are 65 or older, that's $6,000 each, $12,000 as a couple layered on top of everything you already get. Here's the part that surprises people. You get it whether you take the standard deduction or you itemize. It doesn't matter which way you file, which sets it apart from the older, long-standing extra standard deduction for seniors. More on that one in item 5, which only applies if you take the standard deduction. It does begin to phase out at higher income levels. As a single filer, it starts shrinking once your modified adjusted gross income climbs past $75,000. For a married couple filing jointly, that threshold is $150,000. Above the higher cutoffs, it disappears entirely. But think about who that leaves. The vast middle, the retiree living on a normal, modest income. For that person, this is real money, taken straight off the amount the government is allowed to tax. Here's what genuinely bothers me about this one. The people it helps the most are the exact people least likely to catch it. The 65-plus filer with an ordinary income who files their own simple return or hands it to a preparer moving quickly through a stack of them. That's precisely the person who won't notice whether this new deduction was actually applied and who will quietly overpay without ever knowing. So, the action here is simple, and it takes about 2 minutes. When your return is done, before you sign it, look it over and confirm the enhanced deduction for seniors was actually taken. If you're using software, make sure your date of birth is entered correctly because that's what triggers it. This isn't a fight with anyone. It's a line on a form and you just have to make sure it's there. 2, your property tax bill. This is where the biggest dollars on the entire list are hiding. Pay close attention because there are actually 3 separate forms stacked on top of each other here. And most homeowners don't have a single one of them filed correctly. The first is the homestead exemption. It takes a chunk of your home's assessed value off the books before the county ever calculates what you owe. In Florida, that chunk is $50,000. In Texas, it's $100,000 off the school tax portion of your bill. Every state handles it differently, but in nearly every state, it's real money. Here's where people get caught. Most homeowners assume the homestead exemption is automatic, that it just kicks in the day you buy the house. In most states, it isn't. You have to file a 1-page form with the county, usually once ahead of a spring deadline. File it once, and in many states, it stays in place for as long as you own the home. Miss it, and you pay the full bill that year for no reason at all. The second form sits right on top of the first. It's the senior or age 65 exemption. Most states that offer a homestead exemption also offer an additional one that kicks in the year you turn 65. And this is the one the county will almost never mail you about on its own. It's a completely separate application, and you have to ask for it by name. In Texas, every homeowner 65 and older gets an additional $10,000 off the school tax portion on top of the homestead exemption. In Florida, the senior exemption can add another $50,000 on top of the basic $50,000, effectively doubling the write-off. And here's the part where comfortable retirees wrongly tune out. They hear the word senior and assume there must be an income test they'll fail. But in more than half the states that offer this, there's no income test at all. Texas, Florida, Georgia, Tennessee, Alabama, and others. You turn 65, you file, you get it, age is the only qualification. The third one is the most valuable of all, the senior assessment freeze. Here's what it does. When you turn 65 and file the freeze application, the county locks in your home's taxable value at whatever it is the year you apply. From that point forward, it doesn't matter how much your neighborhood gentrifies or how high values climb on your street, your tax bill is calculated on that frozen number. In Texas, once you file for the over 65 tax ceiling, your school district tax is frozen at the actual dollar amount you paid that year. Your home's value can double, the bill cannot rise. So, who does all of this help the most? Honestly, everyone, the basic homestead exemption helps the lower income homeowner the most in percentage terms. But the freeze is worth a small fortune to the person sitting on a paid-off home that's tripled in value in recent years. Because they're the ones staring down the biggest potential increases. And renters, I told you this one was yours too. Here's why. Your landlord pays that property tax bill and passes every dollar of the increase straight into your rent. When those bills are frozen or reduced across a community, rents stop climbing the way they otherwise would. 3, your Medicare Part B premium. This is the one quietly pulled out of your Social Security check every single month before the money ever lands in your account. which is exactly why a lot of people forget they're even paying it. For 2026, the standard Medicare Part B premium rose to about $202.90 a month, up from $185.00 in 2025. And that amount comes out automatically month after month. But here's what almost nobody is told. There's a set of programs called Medicare Savings Programs. And if your income falls under the limit, your state will pay that Part B premium for you. Not lower it. Pay it outright. There are 3 tiers going by the initials QMB, SLMB, and QI. The most generous, QMB, doesn't just cover your premium. It also wipes out most of your deductibles and copays on top of it. Here's what genuinely bothers me about this one, and it's why I'm spending extra time on it. The income limits are far higher than most people assume. A lot of folks glance at the word assistance, decide they must make too much, and never check when they'd actually qualify. On top of that, a number of states no longer count your assets at all. So your savings or your paid-off house don't disqualify you. And despite all of that, this remains one of the most underclaimed benefits in the entire system. Millions of people who currently qualify never apply, purely because no one ever told them the program exists. Who does it help the most? Anyone living mostly on Social Security. This is enormous for you. The action here is one phone call. Call your state health insurance assistance program, your local SHIP office. It's free, and they'll screen you for a Medicare savings program and help you apply. That one call can put close to $200 a month back into your check. Do the math over a year. And while you have them on the phone, ask about one more thing in the same family, because it usually travels right alongside it. It's called extra help, and some people know it by its other name, the low-income subsidy. This one targets a completely different bill, the cost of your prescription drugs under Medicare Part D, if you qualify. And many of the same people who qualify for a Medicare savings program also qualify here. It can dramatically lower what you pay for medications, your drug plan premium, and your deductible. And here's the reason I bring it up right after the last one. In a lot of cases, getting approved for a Medicare savings program enrolls you in extra help automatically. So, that's 2 of the biggest healthcare cost breaks in the entire system, both unlocked by one phone call and one application. For someone taking several prescriptions a month, that's not pocket change. That can be one of the largest benefits on this whole list, and it's bundled right into the call I just told you to make. 4. Phone, internet, and energy assistance. Item 4 is smaller in dollar terms, but it's still a bill you can legally stop carrying in full. So, I'm not going to skip past it. There's a federal program called Lifeline that takes about $9.25 a month off your phone or internet bill. And many states stack their own discount right on top of that, which can push it higher. Separately, if heating or cooling your home is ever a strain on the budget, there's a program called LIHEAP, the Low Income Home Energy Assistance Program, which helps pay that utility bill directly. I'll be honest with you, this isn't the glamorous one on the list. $9 a month isn't going to change your life. But here's how I want you to think about it. It's one more recurring bill that the system already decided people in your situation shouldn't have to carry alone. And it sits there unclaimed for the same reason as all the others. You only get it if you ask. When you stack a few of these together, the small ones and the big ones, that's when the monthly number really starts to move. 5. The long-standing extra standard deduction for seniors, which brings me to number 5, the one I told you to stay to the end for, because this is the item that quietly costs people the most year after year. And it's also the single easiest one on the entire list to fix. Remember that brand new $6,000 bonus deduction from the start of this video? On top of that, the tax code gives every filer age 65 and older a second, entirely separate additional standard deduction, one that's been in the law for years. For the 2026 tax year, that's roughly $2,050 for single filers and about $1,650 per qualifying spouse for married couples. It stacks right on top of the regular standard deduction everyone gets, and now it also stacks with the new bonus deduction. Put all 3 together, the regular standard deduction, the long-standing senior add-on, and the new $6,000 bonus, and you find that a large number of people over 65 owe far less in federal tax than they believe they do. A meaningful number of them owe nothing at all. But here's the quiet trap. Those same people keep over withholding from their pension or social security out of habit. Or they keep handing their taxes to someone who never stops to adjust for their age. Year after year, they hand the government an interest-free loan and call it normal. In my experience, this is the most common and the most fixable money mistake people over 65 make. What I think most people don't understand is that the tax code isn't trying to hide this from you out of malice. It's just that no part of the system is set up to walk over and tell you. The easiest move you can make is this. When your return is prepared this year, confirm that both your regular standard deduction and your age 65 additional deduction were applied. Then ask whether your withholding should be adjusted going forward so you stop overpaying every month. It's not a battle. It's a box that simply has to be checked correctly. A few bonus moves for homeowners with real assets. If you do have some real assets, let me give you a few bonus moves that almost nobody ever hears about. Because for the right person, these are worth more than everything else on this list combined. The first is a property tax deferral. In a number of states, once you reach a certain age, you can choose to stop paying the property tax bill entirely, and the state simply settles up later when the home is eventually sold or passed on to your heirs. You keep your cash flow in the meantime. The second is the surviving spouse carryover. When one spouse passes away, senior exemptions and freezes don't automatically transfer in many places, and families lose them by accident. But if you file the right paperwork, the surviving spouse can often keep the deceased spouse's exemption alive instead of watching the tax bill jump in the worst possible year. The third is one people laugh at until they add it up. In a number of states, once you hit a certain age, your vehicle registration or annual excise fees get reduced or waived entirely. It's small money every year, but it's your money and it's sitting there. Margaret's story. Let me bring all of this back to a real person. I once worked with a woman I'll call Margaret, 72 years old, living near Toledo. A widow in a paid-off home that had quietly doubled in value over the years, getting by mostly on her social security and a small pension. When we sat down and looked at her situation, here's what we found. She was paying the full Medicare Part B premium every month. She was paying the full unfrozen property tax bill on a home that had appreciated for years. And she was paying more in federal tax than she actually owed because her preparer had never applied her senior deductions or adjusted her withholding. All three at the same time. And every single one of them was something she had the legal right to stop. So, we filed 3 forms. A Medicare Savings Program application, the senior exemption and freeze with her county, and a corrected tax return. Nothing about Margaret's life changed. She didn't move. She didn't sell anything. The only thing that changed was how much of her own money stayed in her account at the end of every month. And here's the part I want you to really hear. She wasn't gaming the system. She wasn't getting away with anything. She was simply finally claiming what she had already earned over a lifetime of doing everything right. That's the entire point of what I'm telling you today. Being legally exempt and actually keeping the money are 2 different things. The only bridge between them is the form, and the agencies aren't going to build that bridge for you. What to do this week? Here's exactly what I want you to do this week, and none of it costs you $1. First, call your county assessor's office and ask by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. If any of them aren't, ask which form adds them and what the deadline is. Next, call your local SHIP office and ask them to screen you for a Medicare savings program. And finally, the next time your tax return is prepared, confirm that your senior deductions were applied and ask whether your withholding should be adjusted. And if the cost of paying someone is part of why you've been putting this off, listen closely, because you don't have to pay anyone. There are 2 free programs staffed by IRS-certified volunteers. One is called Tax Counseling for the Elderly, and the other is AARP Tax Aid. They'll sit down with you and file your return for free, and they know exactly which senior deductions to look for. So, for most of you, the cost of finally catching every one of these is nothing at all. That's it. A few phone calls and a couple of forms standing between you and money that has been yours all along. If this one caught you off guard, there's another video right here on the channel where I walk through those property tax forms in much more detail, state by state. It's the same kind of money hiding in the same kind of silence. And the card for it is on screen right now. One last quick thing, and it matters. This is general education, not personal legal or tax advice. These rules really do vary by state and by income. So always confirm your own situation with your county, your stateship office, or a qualified professional before you act. And if anything here helped you, do one thing for me in return. Send this to one person you know who's over 65. It won't cost you a thing, and it just might put a few $100s a month back in their pockets. I'll see you in the next one.